And now we turn our focus to the currency and how it is faring. In studio for the first time and not in London via Skype is Lukman Otunuga, who is the research analyst at FXTM. Lukman, thanks so much for joining us in studio.
Thank you for having me here today. It's a pleasure.
Yeah, and you come at a week when the rand is started on a rather front foot. But obviously we are incredibly volatile. Talk to me about where you're seeing the rand specifically and how you're seeing a trade this week.
Well, when we look at the South African rand year to date, interestingly, it's been flat against the dollar. So the local currency has been given a new slate to perform well or disappoint in the year ahead. When I'm looking at the rand in general, though, there's many factors that are influencing it. Of course, we have domestic and external, but I'm naturally focusing more on external. South Africa is an open economy. We know that roughly 30% of GDP is from exports. So when the elephants in the world, the United States and China fight, South Africa, which is the grass, will feel the heat. So my outlook on Iran is actually dependent on the outcome of the G20 meeting and if trade tensions between the United States and China ease this year.
And I imagine that you have a forecast for best and worst case scenarios of the things that you're looking at. So take us through the worst case scenario first.
So looking at the G20 meting, frankly, I believe it's become a high-stake poker game of risk right now because there's so much going on. My best case scenario for this week is a situation where the United States and China both agree to restart talks because such a scenario will open a path for central banks across the globe to continue easing stimulus, and this is what's driving global equity markets. But naturally, the worst case scenario will be if both leaders agree to disagree. This will spark risk aversion, naturally impacting emerging market currencies such as the rand.
All right, so in the best case scenario whereby talks are, the elephants agree to start talks, the rand currently at around 14.30 right now, where do you see the currency headed?
So in a best case scenario, the improvement in VIX sentiment could drive the rand back below 14.00.
And worst?
Worst case scenario, let's not get started on that. We know how extremely sensitive the rand is, especially in risk-averse scenarios. We've seen, especially in recent days when there was a lot of uncertainty in South Africa, if risk aversion makes a return, don't be surprised if the South African rand trades back to the 13 level.
All right, so we domestically do have some things that are affecting our currency. We've got a couple of data points that are out today, or out this week rather. Producer inflation numbers, I imagine, won't have that big of an effect on the currency, not as much as our trade position, for instance. So talk to me about the trade numbers and whether or how they could impact where the currency is headed this week.
Yeah, the trade numbers will be very significant, especially looking at predictions. It looks like South Africa may swing back into a surplus, but if we do have a situation where there's a deficit, it does confirm how trade tensions are actually impacting demand for South African products. And as I said earlier, we know that South Africa is an open economy, so this will naturally negatively impact the rand. But I don't think it's fair to really focus more on domestics. It's more of external factors that will continue influencing the local currency.
But as a foreign investor, now that you are here in South Africa, I mean, many a times we hear from foreign investors like yourself that the policy framework in South Africa is somewhat of a disadvantage to us somewhat, specifically when you look at things like the mining charter that my previous guest has spoken about. We've got issues regarding land reform and also Eskom. So for you, is the political or the policy environment a concern, or as you say, it's more to do with what is happening outside?
As I said, the environment will impact, but when we're looking at the rand's valuation, I believe that the rand is more tailored and more impacted by external factors. For example, if we look at the South African Reserve Bank, I believe that they're waiting for the Federal Reserve to make a move before moving forward to cutting interest rates. We know that consumption is a major player in the South African economy. A rate cut in South Africa would be positive in the sense that it could drive growth and keep the South African economy rolling in 2019.
Well, Lukman, I certainly hope for a rate cut as a South African consumer, but we'll leave it there. Of course, I was in a conversation with Lukman Otunuga, who is a research analyst at FXTM, joining us in studio and not from his London offices via Skype.